We're back with three more funds subject to ratings updates by our manager research team. Analyst Dan Haydon is here to tell me more. Dan, what's the first fund on our list today?
So, Ollie, great to be here. The first fund I will be discussing today is the City of London Investment Trust, which is run by Janus Henderson's Job Curtis. This is UK equity income investing by a true strategy veteran in the form of Job Curtis, who has a near unparalleled 30-year tenure on this investment trust. The approach here is pragmatic and somewhat old school. It's conservative UK equity income investing, targeting high-yielding companies with some income growth supported by good cash flows. Job likes a margin of safety, although he's not an outright value investor, and arguably the edge here is the long-term time horizon he considers, combined with the consistency of execution and the incredible tacit knowledge he's built up over his long career. The investment trust structure provides additional tools such as gearing to enhance returns and revenue reserves to smooth dividends. Job made full use of the revenue reserves through the recent market-related turmoil in the COVID period, and the trust continues to secure its status as the UK's longest-running dividend hero. So what do I mean by that? It means it's consistently and consecutively raised its dividend for each of the last 55 years. Over his long tenure, Curtis has outperformed the category average and the index. The fund has faced some stylistic headwinds in recent years, but this has now abated and the approach has benefited from recent market dynamics. In any case, a large part of the attraction here is the attractive relative yield and the stable and rising dividend payments. Overall, the judicious and consistent approach, combined with vast portfolio management experience, leads to a silver Morningstar analyst rating here.
Great. And our second fund today is Trojan Income, isn't it? What's going on there, Dan?
Yeah, that's right, Ollie. So the Trojan Income Fund is now managed by Blake Hutchins and his deputy, Fergus McCorkle, with support from the wider investment team. This is defensive, high-quality dividend growth investing in UK equities. Blake Hutchins formally took the lead here from his predecessor Francis Brooke after a smooth transition lasting about 2.5 years. He shares the same overarching philosophy as Brooke and previously managed money in a very similar way at 91. At Troy, all 14 investors share the same investment philosophy, which emphasises cautious long-term growth and the protection of capital. Here, Blake Hutchins invests in UK equities with a prudent dividend growth approach combined with an absolute return mindset. The team seeks to invest in high-quality businesses that can sustainably grow their dividends over the long run. That means high return on invested capital that is in excess of the cost of capital, and strong balance sheets and the potential for dividend growth. Shorter-term yield here is of lesser concern, and it may not always beat the market in terms of yield. The stock universe is tight, which permits for an intensive fundamental research process, and the defensive approach is borne out in low volatility. Despite a recent return of poor returns, investors have been well served here on an absolute and risk-adjusted basis over the long term. Indeed, the focus on high-quality companies and dividend growth should serve investors well if they allow compounding to work its long-term magic. Overall, the collegiate approach and dependable, intellectually sound process leads to silver and bronze Morningstar analyst ratings, depending on fees.
Brilliant. And our final fund today is the Aldebaran Global Long Only Fund, isn't it? Tell me a little bit more about that, Dan.
Yeah, that's right, Ollie. So the Aldebaran Global Long Only Fund is also a boutique offering. It's managed by partners Jeremy Lang, William Patterson and Ben Fitchie. So this is a troupe of experienced investors who've spent a lot of time together over the years. Since launching Aldebaran in 2010, they've sensibly grown the team, and it's now got a reasonable number of analysts supporting them. So the strategy itself is interesting. They're seeking to identify and exploit market inefficiencies arising from behavioural biases. So that might be investor bias from banks and asset managers, or else biases on the company management side of the equation. So what exactly do I mean by that? So for investor bias, they're wanting to see either misplaced anxiety or skepticism, while for management bias, they're looking for conservative management teams that aim to avoid too much risk-taking. For anxiety, they're looking for a pattern of poor price performance, likely tied to traumatic financial updates such as profit warnings or other financial difficulties. They also look for anchoring events that may unduly influence investor behaviour long after those problems have actually subsided. On the flip side, they're also looking for companies where investors are doubtful a stock can continue to do well. Essentially, that means underappreciated growth over the long haul. In practice, this leads to a process that shares some of the same ingredients as quant. So there's a similar focus on earnings momentum and value factor investing. However, here the universe of stocks is further narrowed through fundamental research that looks at the impact of those behavioural biases I mentioned earlier. The fund has generated reasonable performance with low accompanying risk, but has admittedly struggled a bit in the last 18 months or so. We like the manager's response to this. They've been analytical in their self-assessments, and adjustments to the process, such as the introduction of banks into the universe, have been well reasoned and follow lengthy theoretical research over many years. Overall, this is a strong team employing a distinct process, and it continues to be a compelling core global equity option, leading to a bronze analyst rating across all share classes.
Dan, thanks so much. For more on manager research, check out our regular Tuesday updates. Until next time, I've been Ollie Smith for Morningstar.